If you take a look at the market reaction, Carolyn, you're basically seeing a higher euro dollar now. 1.1981 is how we print. Also, the bond buying has sort of paired itself a little bit. We're now seeing selling on the margin over in France and Germany. Walk us through the biggest takeaway from the account.
Hi, Alex. So the most important thing from the account is that we see that more and more ECB governing council members are starting to find agreement that they need to change, or they might need to change their communication starting early this year if the economy keeps improving as it does. So at the moment, you have an ECB guidance that is very, very accommodative, and some members of the ECB might not agree that that reflects the economic reality anymore. And as we go forth in the coming weeks and months, what they'll be doing is watching the economy very closely, watching inflation trends and wage developments very closely. And as the chief economist, Peter Pratt, has noted before, we could see a shift in the communication that focuses more on interest rates and the accommodation that comes from that part of the ECB's policy rather than only QE.
What does that actually mean? I mean, the communication part. Like, what would they say?
So at the moment, what the ECB does is they say that QE will continue till September, as we know, but that it could, continue until they see a sustained adjustment in inflation. And what might change about that is that they will focus on other parts of the guidance if they need to start preparing for an exit from QE. And several governing council members have already spoken about the need to end QE. We've got Jens Weidmann from the German Central Bank, several others, even more influential members like Benoit Cœuré, who sits on the executive board, have spoken about the fact that there's a reasonable chance that QE might have seen its last extension in October. And the key will be that they will be very careful in adjusting their communication, because they won't want to tighten financial conditions more than is warranted.